All right, are you struggling with trading the right zones or zones that may appear to be high probability zones and then they don't work out? I want to talk about this because it's a hot topic. And first and foremost, those that are watching, if you're a beginner trader or any level of trader, you have to understand one thing when it comes to trading futures. And we're looking here at the Nasdaq 100. Try your best to avoid traps that the market makers are actually making or setting up. All right. You have to understand what is a clear break of structure, which way is the market actually moving when it comes to a trend. Okay. Is it breaking structure to the upside consistently? Are you getting decent pullbacks to key areas of demand or supply? But when it comes to clean breaks of structure, when trading futures, okay, you have to understand and pick which zones make the most sense, which ones look the most appetizing to the eye, and avoid the false signals, okay? Because a lot of times at zones, this is where I talk about mitigated versus unmitigated zones, zones that have gaps versus zones that do not. It's all the same, okay? It's very imperative that you understand what I'm trying to say, because even though the market may look like it have a gap at a zone, it may not truly have a gap at the zone, meaning that zone may be a mitigated zone versus one that's not mitigated, okay? So for example, I'm just going to show you just price action today and what took place. Take a look and see what happened in these zones right here, okay? Let's just take a quick look. Because you need to be able to identify, again, is the zone mitigated? Is it unmitigated? Is there a true gap there from where the market moved away from it after breaking structure? Meaning when there's the market was like right here, okay? Look, the market broke structure above this area here as it pushed to the upside, all right? So I waited patiently, okay? And this took place what time this morning? Around 8 o'clock this morning. 7:40. Well, it was a little later than that when it broke the actual structure, but this zone was starting to be created at 7:45 this morning, and then it pulled back close to 10:15, but it didn't tap it. Okay, it retraced back, and then it came and tapped the zone. But on its move to the downside, it also did what? It also created we had a structural break to the downside. We made a low, lower high, and lower low, creating an area of structure here. It pulls back. This is an unmitigated zone, just as well as this is an unmitigated zone. Now look, I want to show you on these two setups right here, the difference of what will help you understand, and look for in a trade working out more in your favor, okay? Again, there's no 100% true or holy grail anything that's going to work 100% of the time. So understand that, okay? No matter what strategy. But we're trading based on probability, and when it comes to supply and demand, aggressive selling, aggressive buying, aggressive selling, break a structure above this area here. So when the market pushed up here, I come back, I'm marking this zone here. Why? Look at the bullish candle that pushed to the upside here, okay? This area, this area right here, this last bullish candle, a bearish candle right here, see the market pushed up, pulled back, broke higher. It pushed up with this bullish candle right here and then pulled back right here. The candle that broke above this bearish down candle right here was this candle here. This candle here stopped and closed right here. The next candle closed above this down bearish candle, and then it continued pushing to the upside, creating this beautiful demand area where we had a structural break here. Okay, so when I see things like that, to where a candle pushed up but did not come to the top of the wick or the body of the candle, either way, all right, this is the bottom, this is the top where the wick is at. It didn't touch it tick to tick. It closes before it, and then the next candle closes after it, above it. Then that is a unmitigated, ungapped zone, and it continued pushing to the upside, as you can see here. The first pullback that it had, bring this down. Whoops. Let's see. Was right here, where it pushed up and then pulled back right here. So then you had a difference between this area here and this area here, which is a large gap. All right. And then the market pushed up, and then it came back, closed the gap in some, pulled back, pushed down, and closed the gap in some more, and still left an area, a small gap there, pull back, and then eventually close the gap in all the way back to the wick or the top of the wick of that last bearish candle to the downside right there, right? Now, that's unmitigated. That's a fresh zone. That is the way I want to see things unfold. Just like right here on this beautiful supply setup, look what happened. The last bullish candle on the pullback to the upside right here had a bearish candle close. All right, this candle here that came down closed right here. The next candle, the bearish candle, was the one that closed below the bottom end of the wick of the bullish candle to the upside right here, okay? No candle came down wick to wick and stopped before closing, okay? All right, or wicking right here at the bottom end of this bullish candle. They pushed right through and closed at the bottom, this candle here. Leaving this zone, aggressive selling, supply area, unmitigated area where there's a gap up. Now, I can tell you right now, I know a lot of people were watching this zone or what this area right here, okay? All right, I'm going to tell you, to me, this is a mitigated zone where there's no gap at. Take a look right here. All right, so we got a push down, pull back, break a structure, right? Pull back, okay? And then it breaks structure to the downside again. Lots of people are probably watching this area right here. But take a look here. You see that last bullish up candle right here? We got the bottom end of that wick right there. We got this bullish candle that pushed, this bearish candle that pushed down right here. The next bearish candle, what did it do? It came tick to the bottom end of that last bullish candle. We want to see an area, we want to see where a candle closes right below it, not come down to the bottom end of the wick like it did on this bearish candle right here, to basically give us a double bottom right there, okay? See how it stopped right tick to tick at it? That is a mitigated zone. It had already touched the bottom end of that last bullish candle, the wick of it, the bottom end of it, with that bearish candle right there. And if you probably were looking at it on a lower base chart, you'll see where it tapped it, or it will look like it would tap and then pull back. So it's already tested, okay? So you don't want to take trades or look for opportunities like that. At least I'm not, okay? Then the next candle closed, okay? So I don't want to see where the market's pushed down this bearish candle right here, and it came right to the bottom end, tick to tick, okay? Because technically speaking, they could have wicked that area out, or stopped at that area there, the bottom end of it, and then pull back and then broke, okay? So I don't like trades like that. I like to see where the market has done just like it did right here, where it pushed up, the candle closed before, candle closed within the, this red last bearish candle to the downside right here before it pushed up, with this bullish candle closed, and then the next candle closed above it, okay? So that gives us a full closure above the candle, okay? Not right here where it comes down, stops tick to tick right at the back end of the wick of the last bullish candle to the upside, and then the next candle closes. So this to me is a low probability zone right here. This zone, which I'm sure, give me 1 second. Right here where a lot of people, I can guarantee you, they marked this zone up right here. And then they were eyeballing that zone right here. The market gets to it, and what does it do? It blasts through it. This is a mitigated zone. You just have to really zoom in to see that it came down. It basically a double bottom, right? It pushed up, came back down to the lower portion of the wick of that bullish candle again with that bearish candle that closed to the downside right here, but it didn't break through, okay? It stopped right there at it, probably pulled back and then pushed lower. So be mindful where you see, whether you're trading supply or demand, where you see a candle come right up to the wick, like this candle here. If this bullish candle came up and stopped at the wick of that bearish candle right there, it came up and closed right there, I wouldn't have marked that zone, because it had been low probability, mitigated, ungapped zone there, okay? Same thing right here, if this candle right here would have came down and closed right here, I wouldn't have marked that zone to be a high probability zone. It would have been low probability, okay? So this is, when you see zones like that, just be careful and be mindful when they come down and they do this type of price action right here, then break structure, and then come back and you're marking this thinking it's a high probability, unmitigated zone. You got to be careful because you can't see it. But this in my playbook is what I consider a mitigated zone, and one that I'm not going to be interested in. So I would delete that right there. So just be careful when you see those type things take place where candles are basically stopping it and closing right at the top end or bottom end of a wick. Okay, in this case here, the bottom end of a wick, If it did this right here, it stopped right here, then this would be the top end of a wick, okay, on a demand setup. And again, this would be on a supply setup right here. But these two were beautiful right here, okay? Beautiful setups right here this morning. So if you took either one of these setups, then you got into a decent trade. But again, I wanted to share this with you guys. For all those that, follow the channel, thank you for doing so and continue watching the videos. Hopefully this video actually shine some light or some insight to you about zones as well. What to really look for when it comes to mitigated versus mitigated, gap versus ungapped, same thing. Okay. But yeah, if you're a first time viewer here on the channel and you're not a current subscriber, please take the time to go ahead and click on that sub button, become part of the team and the community. I'm making this relative or this video content because I truly want to see people, for one, become inspired. Okay. For two, for those individuals that are passionate about trading, I really want to help individuals out. So that's why I make so much video content, sharing based on experience, sharing based on knowledge and information that I've obtained and acquired over the years, and I kind of built upon myself as well as educating my own self. So here it is. I'm sharing it with you guys, video after video, and hopefully the video content helps out. If you found value in today's video, do me the biggest favor and click on the thumbs up button. Okay, click that like button for me. It is going to help the video content to get out to where it needs to be to other individuals that are seeking information just like you are. All right. To all those that always ask about how to become an elite member who want the trade breakdowns where I go in more detail about trade setups, just scroll down to the description portion of the video. You'll see a link there right below the Discord link that says become an elite member. Click on that and choose one of the tiers. You want to choose the one for $6.99 if you want direct access to the trade breakdowns, the video playlist, and other various video content that I post. So again, I appreciate everyone that are current elite members, those that are supporting my efforts as a content creator. Thank you for being such loyal supporters as well. Thank you for everyone that watches the videos, and I'll see you in the next one.